This is a quick trading post for tonight. The markets are still closed, so these prices aren't changing, but they'll come online in a few hours, maybe 4 hours, 3 hours. So what do we do? This is the S&P, which is the larger market in New York. So we have our normal setup. We have our Bollinger Bands. The brown line is the 20, but this is a daily plot. So this is the brown line would be the 20-day moving average. The yellow line is the 50. The red is 100, and the black is 200. And these are, your candlesticks. So the immediate thing, kicking and screaming thing, is this is an interesting market. This is the 200-day moving average. That's a classic measure of whether you're in a bull or bear market. If the 200-day is broken, it is bad. You probably are aware of the times when the 200-day has been broken. This is a good trading opportunity though, because most of the time, even in recent times, we can see when it has dipped to the 200, it is immediately shot up very quickly. You're talking about a week. Likewise, when it tried again here, it just touched the 200, shot up. Now remember, our first trade was with the DAX when it was in a similar position, when it was just messing around with the 200-day. This caught me by surprise a bit, because I've been looking at the DAX. So we're going to flip over to see what's going on in Europe. What's going on in the DAX, to compare and contrast. So looking at the S&P, we can see it's fallen. It broke through the 200, shot up, fell back, touched it again, shot up, but not as high as before, and it's fallen back again. This could be due to the fact that interest rates are about to go up. It could be due to all kinds of reasons. I'll begin, and this is going to be pretty quick, I'll begin by just contrasting with what's going on in Europe and the DAX, and then I'll suggest a trade. Here it is, similar time period, and actually these dates are the same. So we began our trade here. My first video on these trades was when I'd bought at this stage. So you're buying at 10,675. Immediately shot up. I then expected it to keep going up, but it fell. So I took that was my pain as trade goes against me video. But I used tight stop losses to exit this position and survive. And then I made profit as it went up again. Now, for the compare and contrast, firstly, this just touched the 200-day moving average, while in the S&P, and I'll just look at the dates. I checked this before. See, at the bottom, it's the 8th of July, while here we have July 8th and 9th. But here it actually broke through the 200. Now on this day, these dates, the 27th and 28th of July, it again touched the 200-day in America. But if you switch back to Germany, 27th and 28th of July, it was nowhere near the 200. So, it didn't fall anywhere by anywhere near as much. And now we find that the S&P is again touching, in fact it has broken through the 200-day, while in Europe, in the DAX, we're just up here, where we haven't even... That's why it caught me by surprise when I heard that the S&P had broken the 200, because I was kind of going, what? The 200 is not even in the picture. I would say in the DAX, I would look at it more as it touched the 200, it broke through the 100, which is the red line, didn't manage to really follow through, so it fell back down. Now it's trying to go past the 100 again. So will it keep going up? It's more a kind of fighting its way on the upside. Now again, now in Europe we have QE going on at the moment. So there are trillions of euros being printed, being injected into the banking system and so on. So the situation in Europe is very different to that in America, where QE is going away, where they're talking more about hiking interest rates. Now, at the moment, Europe is pushing, if anything, more QE, and the euro has fallen a lot, which is very supportive of the local economy, because all the companies' earnings are coming up very strongly, because obviously if the euro falls by 30-40%, it's far easier to export, it's far easier to make profit. So where were we? Well, what's the trade? Firstly, where I'm actually long. I'm sitting on a long DAX position, which I just entered in the evening, just before it closed. I'm gonna see this, or I see this as behaving in the same way as the S&P. It might not be at the 200, but the days are exactly the same, and when this jumped up here and here in the States, a similar thing happened in the DAX. So you could, maybe the cleaner trade is in the S&P. So what would it be? Well, we've done risk reward. We've done tight, use stop losses. So basically the idea would be we buy the S&P, put in a stop loss below the 200. Now you might put it just at the 200, you might put it below the bottom here. That's probably the safest. So say we put a stop loss at 2065. that would be, below the bottom of this candle. Then, so if the market does collapse and fall, right through the 200-day to 1,000, we're long gone. So we're only risking 10, 12, something like that. On the upside, well, I could say 2,100. So basically going, the loss is 12 and we want to win 24. So we have a 2-to-1 win-loss ratio. We only need to be correct 1 in 3 times to break even. So that would be the suggested trade for tonight. And I'm talking European time. So I'll have to stay up till 11 or 12. Though I entered this trade, when it was at the 200. Except I bought it via the DAX as opposed to buying it via the S&P. So I just wanted to get that out there, and we can talk about what happened later on. It was important to record and post this video now because this situation is now. If I post this tomorrow afternoon, it might have already shot up here, in which case, what's my point? Then most of the profit has already occurred. So we'll see how it goes tomorrow, and good luck.